Real-time news on the hour, every hour.
Welcome to CryptoBanter.com. I'm Crypto Man Run, and if you're watching this, you're probably saying, what are you doing live on air on a Sunday? And indeed, we don't actually broadcast on a Sunday, but there was news on Friday, and I wanted to bring my interpretation of the news to you before the market opens on Monday so that you guys can make smart trading decisions, because that's what Crypto Banter is about. It's about bringing you live, real-time, 24/7 information so that you can make better trading decisions. And if you like this content, hit the like button, hit the subscribe button, and hit that bell, because that bell will send you an alert every time we come on air. And then share this content, because the more you share this content, the more people get to know about us, about crypto, and the more the industry grows. So with that in mind, let's get on with the show and let's move straight into the content. So on Friday, as the US market opened, Bitcoin surged to an all-time high. Now, if you remember what happened, we tested the old all-time high with the $40,000 level. We got rejected with a $4,000 candle, and then it was off to the all-time high. Now, despite a slightly stronger dollar, something else happened that's worth noting, and that is that we saw the gold price go down. And this was despite a slightly stronger dollar and Bitcoin going high. The gold price went down by about $100, and $100 wipeout in the gold price means about $100 billion loss in market cap. And Bitcoin went up by about $100 billion in market cap. So is there a significance to this? Is this all a coincidence? Let's take a deeper look at what this actually means. So on Friday, the jobs numbers in the US came out, and they showed that the US was losing jobs since the pandemic. For the first time, we saw more jobs being lost. What does this mean? Well, it means we're going to get more stimulus. Combine this with the fact that the Democrats have now got both the House and the Senate, and that means that we're probably going to get a lot more stimulus. A lot more stimulus means a lot more money in circulation. And in fact, they're talking about a $3 billion stimulus plan as soon as Joe Biden gets inaugurated. More money in circulation, $3 trillion more in circulation, means that the current assets are going to, or the current value of money is going to go down, it's going to devalue, and investors are going to flock to assets that can hold their value, assets that are scarce in nature. And typically, gold is what they would run to. But on Friday, we saw something different. The job numbers came out, gold went down by $100 billion, and Bitcoin went up by $100 billion. In fact, I think what we saw on Friday was the beginning of a massive move. And that's what I wanted to show you. Let's take a look at this interview on Kitco News from a gold bug. This is a gold analyst talking about gold. Have a look at this.
Started like that. But yeah, gold is getting pounded today. And, you know, the one thing I would say to investors that are into gold is stick with it. This, to me, is a classic retrace. It had a great move up. It's seeing a sell-off. If you look at the chart here, you can see this channel that it was in, which is actually a bullish channel. And you broke above the channel. Now you're kind of back in. But keep an eye on this area here, because if it can close right around this, then I think this is just your run-of-the-mill pullback. Now, this is a big pullback to be run-of-the-mill, and I understand that. But the one thing to keep in mind is that, you know, right now you have this panic into Bitcoin, and I'm a big fan of Bitcoin, but it is getting a little frothy. It's a little insane. Just the last time you had me on, I think it was around 22,000, and that was just a few weeks ago. So we're basically double that. And I think you have a scenario where investors are saying, and this is kind of not the longer term holders, but the shorter term investors are saying, why am I in gold when Bitcoin is going up 5% every single day or 10% a day, and they're selling their gold assets? And I think as a logical investor, you want to step back and say, wait a minute, don't let me get swept up in this euphoria. Stick with gold as part of your portfolio. Now, it doesn't mean you can't have some Bitcoin in your portfolio, but don't go running for the hills, especially considering gold is going to go up continually. The dollar is going to get depreciated. It's going to fall more. We know the Democrats took the Senate now. That means more printing of money. So look for gold to perform well, even on pullbacks. And I'd be a buyer here. I really would.
So I agree with him. I probably would be a buyer here, but I'd be a buyer of Bitcoin. And what he's basically doing is, this is a gold analyst who's now talking about Bitcoin as if Bitcoin is stealing market share from gold. So the cat's out of the bag. And I think we're going to see this big move now of institutions and gold buyers moving out of gold and into Bitcoin. I think it's even come much sooner than we thought. And it's not only this guy. In fact, I made a few calls to some of my analyst friends, and 3 of my analyst friends were unanimous. They said people are moving money out of gold into Bitcoin. And in fact, one of them, who's a gold analyst, sent me this message. He said, I'm thinking of selling all my gold and putting my positions into Bitcoin. So the move's happening much quicker than we think. And if you remember, last week, JP Morgan published a report. And in that report, they called the price target for Bitcoin of $146,000. And they said that over the time that they monitored, $3 billion had flowed into the Grayscale Bitcoin Trust, and $7 billion had flowed out of the GLD ETF, which is the big gold ETF. So that's a huge number, and this is a huge move. And if you want to understand the significance of what's going on, hit the like button, hit the subscribe button, because I'm going to talk to you about why it's so significant that people are moving their money out of Bitcoin into gold. And I'm going to start off by giving you a brief history lesson as to where gold got its significance as a store of value. So stay tuned and hit the like button, hit the subscribe button. So let's get straight into it. When did investors choose this asset over here as a store of value? Well, if you look at the history of the world, before World War I, all currencies were backed by gold. All fiat currencies, all paper currencies represented a share in gold. And that means that they were actually redeemable for gold. You could take a paper currency and you could go to the bank and you could redeem that paper currency for gold. But with this gold standard in place, governments felt very constrained because it meant that before they could print money, they needed the gold to back it. And most governments wanted to spend and didn't have the gold. So in the 1930s, in the US, under President Roosevelt, the US stopped honoring the redemption of gold. And in fact, individual holders of gold were told, they made it illegal for people to hold gold. And people that held gold had to give their gold to the Fed so that the US could print more dollars. This carried on until about 1944. And in 1944, the world was in such a mess that world leaders got together at a place called Bretton Woods. And they came up with a new fiat standard. And under the new fiat standard, all currencies were now going to be backed or pegged to the US dollar. And the US dollar was going to be partially backed by gold. As you can imagine, this mess continued to grow. And by 1971, President Nixon said that currencies no longer had to be backed by gold at all. And so just like that, all currencies in the world were no longer backed by gold, and the use case of gold as a backer of currencies dissipated. Despite this, some investors still run to gold as a safe haven, partially because of its limited supply. But today we have Bitcoin, and Bitcoin is way better. Whereas gold has a limited supply, in inverted commas, limited supply, we know there'll only ever be 21 million Bitcoins. With gold, as the price rises, miners are incentivized to dig deeper and they keep finding different ways to find more gold. With Bitcoin, no matter the price, there's no way that there can ever be more Bitcoin. Gold is heavy. It takes up a lot of space. It needs to be guarded. It's very, very, very difficult to transport. Whereas Bitcoin can be transported in just a matter of seconds. In fact, let's have a look at this transaction. This is a whale that sends $378 million worth of Bitcoin in a few minutes and paid only $29 or $28.68 as a fee. Gold is impossible to divide. In fact, if you want to divide gold, you have to have a smelting and heating facility. If you want to send Bitcoin, you can send 0.1 of a Bitcoin around the world in just a matter of seconds. For me, the most dangerous thing is that gold is stored in central places that governments can attack and take control of the gold. And if you think that that's not going to happen, take a look at what's going on in the world around us. Take a look at Venezuela, at Argentina, at Zimbabwe, and now take a look at the United States. Are you telling me that in a moment of desperation, governments couldn't seize all the gold and all the assets? Tell me something else. How would they seize all the Bitcoin? Since they don't have all the keys, and since we're holding our own keys, there's no way for them to seize our Bitcoin. In fact, there's no way for anybody to get access except the person who's got the keys. So with that in mind, I think we have a better version of gold. I think we have a 10x better version of gold called Bitcoin. And the law of disruption says that when something is 10x better than its incumbent, the market will probably switch. And we're seeing the market switch at an alarming rate. The more it switches, the more price goes up. The more price goes up, the more interest goes up. And so the more price goes up. And so the more interest goes up. And so the cycle perpetuates itself. Today, gold has a market cap of over $10 trillion. And Bitcoin has a market cap of a measly $700 billion at the time of making this video. People are moving out of gold. We're seeing it. We saw it on Friday, and we're going to continue to see the trend. And they're moving into Bitcoin at an alarming pace. And that's why I think that today, even at $40,000 and a $700 billion market cap, it may be a great time to buy Bitcoin. But you make your own decision. I'm Crypto Man Run. I had to bring you this news on a Sunday. I wanted you guys to have this information so that you could keep your eye open to see if these institutions were going to continue moving from gold into Bitcoin. Watch this trend in the next couple of weeks and months, as for the first time, we see institutional FOMO into Bitcoin. They want to get in before the price gets too high. And every time they keep watching, the price gets higher and higher and higher. And at a market cap of 700 billion, there's a long way to go. So I'll see you again, same time, same place tomorrow, 10 a.m. EST tomorrow for our regular program of Crypto Banter. We've got a huge show for you. And we're going to be talking to someone from Tether who claim that Tether is fully backed by dollars, which is a big risk removed from the crypto market. So I'll see you again, same time, same place. Until then, I'm Crypto Man Run. Have a great rest of the weekend. Trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their